Zillow's just released their home value and sales forecast for April. And what's interesting about this report is that Zillow's turned bearish on the U.S. housing market. They actually expect house prices to decline by 1.9% in 2025. Now, previously, they were expecting a 0.6% increase in 2025. So this is a revision downward. They've turned bearish on the market. They still expect 4.2 million houses to be sold in the United States in 2025, which is an increase of 3.3% over 2024. The other thing is they also expect the house mortgage rates to end the year at 6.5%. So what I wanted to do is just go through some of the highs and lows of what they're projecting in the market and what's currently going on in the market according to some of Zillow's published data. Okay, so here we are at Zillow's heat index. This is Zillow's market heat index. And this is a chart from 2018 to 2025. So this gives us the past 7 years of how Zillow has viewed the market, whether it's a neutral market, seller's market, strong seller's market. Incidentally, they don't have it being a buyer's market at any point during the past 7 years. Has not been a buyer's market according to Zillow. And you can see in here, 2018 to 2020 was mostly a neutral market. Then 2020, prices started going up. It started becoming a seller's market generally, and a strong seller's market in 2021, 2022. Then we dropped off to just a seller's market, and the market has been cooling from a seller's market through 2023, 2024. We became neutral again in 2024, and they're showing a seller's market here. However, they are projecting the 1.9% price decline for 2025. Anyway, that's a broad look at the U.S. in aggregate as far as seller's market, neutral market, or buyer's market. And I do find it interesting that it has not been a buyer's market for over 7 years in the United States. Now, if we get down here and they pinpoint some regions, we can see there are areas that they're saying are a buyer's market currently. Then neutral market, seller's market, and of course a strong seller's market. So we'll start out with a buyer's market. Florida is full of buyer's market dots on this map. I'm surprised Texas doesn't have more dots on the map for being a buyer's market because prices are still declining in Texas, and we'll see some more of that later on. Then you have some more through the Mid-Atlantic region here going up to the Great Lakes and New York as well. Neutral markets are spread all over the country, all the way up from Idaho, California, Arizona, depending on where you are. There's quite a few in Texas here going up through Oklahoma. Also in Florida, there's a few in Florida. And then, of course, the southern states here, Georgia, South Carolina, North Carolina, and as well as going up towards the Great Lakes. Sellers markets, we have a lot of sellers markets on the West Coast and a lot on the East Coast. And then, of course, up by the Great Lakes and Midwest and Pacific Northwest and through the mountains as well. Then these strong sellers markets look to be here: San Jose, San Francisco. Those are the strongest, some of the strongest sellers markets. And then, of course, you have them up in the Northeast, and I believe that's Hartford, Syracuse, Bridgeport. We've got the markets listed here. So the buyers markets: Cape Coral, McAllen, Miami, New Orleans, Scranton, Pennsylvania, Jackson, Mississippi, Deltona, Florida, Northport, Florida, Jacksonville, Florida, Little Rock, Arkansas, Palm Bay, Florida, Indianapolis, Pittsburgh, Knoxville, Memphis. Those are the buyers markets. And the strong sellers markets, let's see what they are. The number one sellers market is Rochester, New York, then San Jose, California, San Francisco, Hartford, Connecticut, Syracuse, Bridgeport, Boston, New York, Albany, Buffalo, Washington, D.C., Worcester, Massachusetts, Springfield, Massachusetts. Strong sellers markets all. So we'll continue on with more data here. Here we are at the Zillow Home Value Index. And what this shows us is year over year price increases or declines. So at the top here, we're going to see the cities that have the highest price increases. And that's San Jose, California at 5.46%. You can see Cleveland at 5.29, Providence, Rhode Island at just over 5, New York at 4.76, Hartford at 4.72. So if you can see all the prices here, price increases. These markets have had pretty good increases over the past year. 5%, that's not too bad. Then we go all the way down. You can see all of these cities here. I'm not going to name them all, but you can read the names off here. You have a few places like, Chicago, Buffalo, Milwaukee, Detroit, Philadelphia, Boston, Las Vegas, Washington, D.C., Virginia Beach, Richmond, Virginia. We get down, by the time we're down to the 2% increase value, we're around Los Angeles, Indianapolis, Kansas City, and so on. Now, these price increases decrease until we're going to get into negative territory here. So you come on down here, and you get down to San Diego, San Francisco. That's kind of interesting. San Francisco is not really, they're showing it as a strong buyer's market in the previous data, a strong seller's market, but the price increases are not really, that might be why it is a strong seller's market. The price increases are fairly minimal. It looks like it's ready to turn, to be honest. Same with Nashville. And I believe the inventory is rising in places like Nashville. So then you come down here to Charlotte, North Carolina, Memphis. They're losing value in these cities, just barely in Charlotte and Memphis and Birmingham, Alabama. Houston is on the way down. Raleigh, North Carolina on the way down. Denver is down 1% year over year. Miami 1.5%. Atlanta 1.77. New Orleans, Orlando, Jacksonville, Dallas, Phoenix, San Antonio, Tampa, and Austin. These are down 4.5% in Austin and 4.5% in Tampa. And we can see the average home values there. 366,000 in Tampa, 444,000 in Austin. A place like San Antonio is only 279,000, but it's still down 2.7% over the year. Phoenix, 452,000, down 2.45%. Dallas, 370,000. Jacksonville, 349,000. Orlando, 389. New Orleans, 237. Atlanta, 378. Miami, 481,000. So quite a bit more pricey in places like Miami. I'm sure Denver's more expensive. Yes, Denver's 585,000 for the average home price. In fact, let's just go up and see what some of these other more expensive cities, what the home prices are. San Jose, 1.6 million, 1,664,000. Cleveland, only 233,000. Providence, Rhode Island, 489,000. New York, 686,000. Hartford, 371,000. Let's see, Chicago, 330,000. Let's see a few other cities here. Cincinnati, 289. It's quite a deal. Philadelphia, 369. Detroit, 254,000 for Detroit. Las Vegas, 433,000. Let's see Washington, D.C. 578,000. Hold on, let's go back up there. Washington, 578,000. St. Louis, 256,000. Let's see Seattle, 752,000. Then you get a place like Richmond, it's 375. Los Angeles, 968,000. So you get the point with this data. Highest increases for the year over year, and the biggest drops year over year. Biggest drops, Tampa and Austin, again, just to reiterate. And the biggest gainers, San Jose and Cleveland. Now let's look at inventory. So this is the year over year gain or loss in inventory. So this is inventory on the market. So the biggest gainers for inventory on the market, Denver, Colorado. Now when you look at a more granular level, you will find zip codes that are much higher than these. This is for the metro area overall. So Denver, an increase of 45% year over year. Las Vegas, 44%. San Diego, 43%. Los Angeles, 42%. San Jose, 42%. Raleigh, 40%. Phoenix, 36%. Sacramento, 35%. Even Washington, D.C., 35%. Atlanta, we have all these big cities. There are a lot of big cities here. Even a place like Houston, up, inventory's up 28% year over year. These are all very large increases in year over year inventory. If you look at all of these cities here, and even Providence, Rhode Island's up 21% year over year. So if we scroll down, you can see all these cities that quite a few cities with big increases in inventory year over year. Then we'll get to the decreases in inventory. Actually, very few decreases in inventory. New York City at 3.3% decrease, and Buffalo at 5.4% decrease. So, and then you just have a few that are kind of just above the line here. Chicago at 1.8% increase in inventory. Memphis 2.6% increase in inventory. Milwaukee 3.9%. So those are the inventory levels as they stand. And we'll look at one more thing here. Let's see. Share of listings with a price cut. That's what I wanted to see as well. So these are the cities that have the biggest price cuts. And we can see that Phoenix tops the list with a 37% price cut in Phoenix for year over year. 37% price cut. Tampa, 34%. Jacksonville, 30%. These are listings that have had their prices cut. So people are, cutting the price on these houses. And Dallas, 29%. San Antonio, 28%. Salt Lake City, 28%. Las Vegas, 27%. Oklahoma City, 26%. Houston, 26%. Atlanta, 26%. Indianapolis, 26%. Miami, 26%. So all of these big cities, Memphis, Austin, they're all in the 20s. All Charlotte, 24%. Sacramento, 24%. Columbus, 24%. So these are all cities. The overall for the United States is 23% price cuts, listings with price cuts overall. So if we go all the way down, let's take a look. They declined further and further. Actually, quite a few. You know what? We don't have any. With zero price cuts, or 11% is as low as it goes for price cuts. So Hartford and Buffalo, which are some of the stronger markets as far as being sellers markets, so they're doing well. The cities with the big price cuts are, these are the buyers' paradises. These places here: Phoenix, Tampa, Denver, Nashville, Orlando, Dallas, Las Vegas. All right. So I just wanted to go over some related headlines here. This is from Fast Company. Housing market sees biggest home flipping pullback since 2007. A new survey reveals how home flippers are moving forward in today's affordability constrained housing market. Now this is a long and detailed article. I'm going to leave it linked below in the description, but I just wanted to show you this chart, the total number of U.S. home flips by quarter. You can see this goes all the way back to the year 2000, Q4 of 2000, and you can see through where we had the Great Recession and the housing boom in the early 2000s, the amount of home flips going on, 2004, Q4 of 2004, and then into 2005 really spiked up, and then in the Great Recession afterwards, it really declined, and then going up all the way through the pandemic. Really, when the pandemic took off, the flips really took off, and we surpassed the previous high in the housing boom, over 120,000. You can see on this chart. This data comes from Reza Club. It's a Fast Company article. There is a lot more data in this article. I don't have time to go through all of it, but you're welcome to go through it yourself, and I'll link this article below. Okay, and I have one more link for you here. This is on the Resi Club Analytics website. I will link this story below as well. It is entitled, "These 60 housing markets are seeing falling home prices. Among the 300 largest metro area housing markets, these 60 markets are seeing falling home prices on a year-over-year basis." So these are the largest declines of housing markets, the 60 markets with the largest declines out of 300 markets. And I just wanted to show you some of these, the top ones. Housing markets where home prices are falling. And among the 300 largest metro area housing markets, 60 markets are seeing falling home prices year-on-year basis. The largest decline, Punta Gorda, Florida, 9.85%. Then Cape Coral, 9.8%, 8.02%. Northport, Sarasota, 7. Naples, Marco Island, 6. Austin, what's that? 4.5%. I think that lines up with some of the Zillow data. And then, so these are housing markets with the biggest decline: Tampa, Panama City, Sebastian, Vero Beach, Deltona, Daytona, Texarkana, Port St. Lucie. Then there were, quite a few in Louisiana, like Houma, Louisiana. Then we get all the way to San Antonio, New Braunfels, Texas, Lubbock, Texas, Phoenix. These are all 2 and 3% declines. And you can see the city that might interest you on the chart here with the 60 markets with the biggest price declines. They drop off to almost zero in Amarillo. Rounding error, really. I will link this article below. So when we think about the data overall, yes, Zillow's only projecting a 1.9% price decline for the United States, but you look at some of those markets and they've got pretty big price declines already. Quite a few are expecting even greater price declines. And then you look at all the inventory that's coming on the market. Plenty of cities, major metro areas where the inventory is really ramping up very quickly, and more inventory on the market is probably just going to drive stronger price declines. So we'll just have to see where things go, but it looks like the downturn is on for the bulk of the country, for the overall aggregate of the country. And some states have already seen these price declines for some time. Like I mentioned, Austin had price declines for 3 years now. Florida's had price declines in a lot of markets for a couple of years as well. But it's spreading to other parts of the South, and these strong places, the strong markets seem to be in the Northeast and kind of the Midwest. Those seem to be the holdouts that are managing to hold their prices or even increase in price. Anyway, if you like this kind of content, please subscribe to my channel and give it a like. Thank you very much.